Donald Trump is at it again, making decisions that can shake the very foundation of the financial lives that we've come to understand, the 50-year mortgage. Is it a horrible idea or is there some validity to it? Now, is 50 years really good idea? This argument can be likened to making a decision of whether you want to pay off your mortgage early. And the question really comes down to what is the cost of capital and what is your best alternative investment opportunity? And if you have a very long loan, and the interest rate is 7%, and you can invest that same money in the markets at a rate of 10%, then the difference between what you take on the loan versus what you get in the market is actually going to increase your net worth. So it doesn't really matter whether the loan is 30 years or 50 years. The bottom line is, what is your interest rate? Can it fit your cash flows? And how can you use the remainder of your cash flows to build your net worth? The longer the loan, the cheaper the rate, and the better returns on your other alternatives, the more it makes sense to extend that loan and not pay it down. The next argument is that you will never own anything. You will forever be a renter and a slave to the banks. And the argument there is that you just don't build any equity over 50 years. But here's the stark reality. Taking equity out of your house is incredibly difficult. Outside of selling your home, whether it's a home equity line of credit, a cash out refi, or any other of the things that are popping up, you're just putting yourself back into another long-term loan. What's the point of having a shorter loan if you're just going to have another loan later to access the equity? Equity in a house is very much irrelevant unless you plan to actually sell it. And on average, people hold their houses for about 11 to 12 years. So it's very infrequent that someone will have a fully paid off home. There's nothing stopping you from refinancing into a shorter mortgage, recasting your loan, paying down a big amount, all variety of ways to get that equity faster. And it's not like once you're done paying off the mortgage, you're off the hook. Property tax, insurance, and maintenance costs are something that are going to be with you for the rest of home ownership. Another argument that's been made is the amortization schedule, meaning that majority of your initial payments are going to go to interest. But if you're a high income earner and you itemize, more interest up front actually gives you a better tax deduction. So it's not completely wasted money. The only real valid question here is, will a 50-year mortgage make homes more affordable? And that is up for debate. The first thing that we have to ask ourselves is, what is going to be spread between the 30 and the 50-year mortgage, just like there's a spread between the 50 and the 30-year mortgage. And if that spread is significantly large enough in interest rates, the monthly differences may not make a whole lot of sense. And the second part is that by having a mortgage that's more affordable on a month-to-month basis, is that going to increase the demand for houses, thus increasing the cost of houses, and thus making this a completely moot point? At the end of the day, a mortgage isn't just a tool to build equity. People need stability, a bigger yard for their dog, a better school system, something that they can't find on the rental market. If you want to learn more about how finances work and how to navigate the ever-changing economic system, then follow along for more.